All right, for a look at some of the movers this morning, we welcome in Diane King Hall. She joins me at the desk right now. Diane, great to have you here. And let's start with an earnings mover, because it's easy to forget that there are other, news headlines coming
to chew on.
Yeah, pun intended.
Yes.
I'm going to guess. So Tyson, actually an earnings winner this morning.
Yes.
Not easy to find a winner in today's market this morning. But fill us in. What does Wall Street like about that report?
They beat on both the top and bottom line. They also raised guidance. So I think that are a few of the factors that are playing out with regard to the price action that we're seeing in Tyson, although it is flagging a little bit because it popped out the gate about 4%. Now it's up just about 1.5%. Adjusted EPS was $1.14 a share. That was better than the expectation of 79 cents. Revenue top 13.6 billion. Street was looking for around 13.5 billion. In terms of the growth and the revenue drivers, that was both in chicken and beef. The CEO highlighted chicken, calling it essentially a standout. Operating income in its chicken segment rose to $351 million. To put that in perspective, a year ago, that was $177 million. Adjusted operating margin jumped to 9.1%. Again, a year ago, that was less than 5%, so you saw a major growth there. Beef was up more than 5.5% on a year-over-year basis in terms of volumes. Again, volumes in beef and chicken grew, but volume did decline in some other areas like pork and prepared foods. But again, enough of a standout for them to raise their guidance for Tyson. In terms of their guide now, revenue for the full fiscal year, they're projecting that to be flat to up 1%. Keep in mind, they had originally projected it to be flat or lower. They also increased their fiscal 2025 operating income outlook for the year as well. The projection for that is that they're expecting for the year to see growth up as much as 1% as well for operating income.
So all good news. It seems like exceptional demand for chicken. I saw the CEO said consumers remain focused on adding protein to their diets. So it seems like it's going to be, as we think about New Year's resolutions and some of the diet changes, I guess protein is still going to be important. But Tyson essentially flat right now, so not sure that they'll be able to hold on to these gains in today's market. Yeah,
it will be interesting to see how this plays out throughout the session, especially when you consider the broad market pressure that we're seeing in the overall broader risk-off mood. But, you want to keep in mind, you mentioned the New Year's resolutions. Of course, the adoption of GLP-1s would be helpful with regard to, say, Tyson, because there is the pressure to increase protein there as well.
Oh, interesting. Okay, so yeah, well, I haven't taking a look at the earnings transcript, but curious if the analysts asked about that at all. All right, you have your eye on some cybersecurity names today as well. One analyst turning cautious on that space. Fill us in, and what names are you looking at?
And they're all taking a hit this morning. We're talking about Crowdstrike, Cloudflare, and Fortinet all across the board. Baird downgrading them, becoming less constructive on them. Not completely out, but more neutral. It's downgraded the sector from outperform to neutral for all of them. The concerns, the overarching concern, full valuations and a more balanced risk-reward profile at their current share levels. So you're seeing one thing that I found that's interesting in this downgrade. You saw price target increases across the board. Baird increased the price target of Crowdstrike to 430. That's up from 390. Cloudflare upgraded the price target to 140, up from 125. Fortinet boosting the price target to 112 from 105. So again, not completely. They're not deconstructive on these stocks, but they are more neutral on them now. The outlook as well for 2025 is one of the concerns, that they believe that cybersecurity guidance that we'll see will be cautious, and that it would be prudent for them to be cautious. And we could see an expectations reset as a result. So you're seeing a pricing reset within both the context of this downgrade, and of course we have the overall downdraft on the market right now.
So it looks like for Cloudflare and Fortinet, the analyst at Baird is just joining the majority. 60% in the hold count for Fortinet, 50% in the hold count for Cloudflare. But Crowdstrike, only 18% of analysts rate that as a hold. So very much, in the minority there.
That one is a more contrarian view. And we think back to what happened back in July, and you had some concerns around Crowdstrike after that massive outage. But you didn't see a complete reset in terms of analyst views even after that occurred, because they have been the industry and market leader. One of the things that Baird also talked about is just the premiums that these are trading at, the historic historically wide premiums, and the idea that investors are paying a premium price that may not be reflective of historical norms, and that poses some near-term risks as well. And Baird's stance to me suggests that just waiting for better entry points for all of these. Okay. And so again, you're seeing that pressure across the board, whether we're talking about Crowdstrike, that is down right now about 1.5%, but off of its lows that had originally been down about 3%. Cloudflare getting hit as well, a little more than 3% right now. Fortinet down more than 1% at the moment.
Okay, and you said that Baird's new price target for Crowdstrike, 430.
430.
Okay, so that still implies about $40 upside, including today's sell-off. All right, you also have your eye on Chinese EV makers. Thought that was going to be losses across the board. It seems like more of a mixed picture, though, following January sales. How do those look?
That's right. There were some strong sales there, but there were leaders within them. Xpeng, the leader there, they sold more than 30,000 vehicles in January. That was a more than 250% increase on a year-over-year basis. So you saw strong volume there. It's self-driving technology. You're seeing wide adoption. We're seeing some penetration in urban driving there, up more than 80% for that. Li Auto, they delivered nearly 30,000 vehicles in January, so they're shrinking that leadership that you see with Xpeng. They're closing in on Xpeng. In terms of its model, that is still the best-selling model. That's its long-range EV in China, the L6 model. That's the biggest leader there. In terms of NIO, they are still seeing growth, but their volumes are not as strong when you compare them to, say, Li or to Xpeng. NIO, you saw them have an increase of less than 14,000 vehicles, more than 13,000 essentially in January. That was an increase on a year-over-year basis, but again, it's not keeping up with the leaders there. It was an increase of nearly 38%.
Okay, so Li and NIO lower today, off 2% or more. Xpeng up about 2.5% right now. BYD up about almost 1% right now. Of course, we also have to take a look at Tesla when we talk about Chinese EV makers. We know China a key competitor in terms of, these Chinese EV makers, competitor there. Tesla taking a hit today, likely because of tariff concerns.
Exactly, and that's one of the concerns that's hitting the Chinese EV makers as well. The tariff concerns. We know that the Trump administration has now instituted this 10% tariff on China as well. So it remains to be seen on if there will be an increase in tariffs on China, because out the gate is a smaller tariff compared to, say, Canada or Mexico. So that is one of the kind of question marks that's hanging over this, and also how long these tariffs will be.
Yeah, I saw Chrystia Freeland, Canada's former finance minister, say that Canada should target Tesla specifically, to really get back at Trump and his allies. So we'll see how that plays out. Diane King Hall, thanks so much.
Thank you. You got it.